Hello, listeners. Welcome to another episode of the Jacob Shapiro podcast. As usual, I am your host, Jacob Shapiro, geopolitical analyst, director of research at the Bespoke Group. Joining me on the podcast today for a repeat appearance is Rachel Ziemba. She is the founder of Ziemba Insights and does lots of other interesting things. Originally, we were going to push this out in a week or two, but we decided with Liberation Day upon us that we did not want to sit on any of the insights, in part because everything was going to be overtaken by events anyway. So we hope you enjoy the episode. If you would like to chat with me about anything you heard on this podcast, you can email me directly at jacob@jacobshapiro.com. Otherwise, that's all the notes I have. Take care of the people that you love. Cheers. I will see you out there. All right, Rachel, it's Tuesday, April 1st. Have you noticed that there's a shortage of April Fool's content because every single day is April Fool's content right now? Like, I haven't had to sort through as much garbage.
100%. I actually just commented on a friend's LinkedIn post saying beware. And I do feel like these days it's hard to tell what's satire from what's, happening. And it does feel to me that people are sort of being more wary of what they put out there.
Yeah. Well, so we're recording April 1st. We're going to push this out tomorrow. How are you feeling about Liberation Day? How will you be celebrating Liberation Day tomorrow? Are you looking forward to it?
I'm looking forward to sort of seeing how the many different things that have been pre-announced come out. I'm going to be, I don't know if it's celebrating, but I've been teaching international political economy at New York University this semester, and it's been a wonderful backdrop to both look at the history of trade and political economy, but also, the real world is giving us even more fodder to talk about. So I have my sort of third to last class tomorrow evening at 6:30. So I imagine I'll be unpacking it with my students.
That's amazing. I was an undergrad during the 2008 financial crisis, and I was taking a government class at Cornell with Peter Katzenstein. Shout out to Professor Katzenstein. This story is not going to make. This story is not going to make you look very good, Professor Katzenstein, if you're listening. But so it was right when Lehman Brothers was like collapsing, and he came into the lecture, and I was a second row kind of guy. I didn't want to be with the front row guys, but I wasn't in the back. I was a second row guy. Anyway, he took out a dollar bill in front of the entire students and ripped the dollar bill in half and said, "I'm not doing class today. This is the biggest financial crisis in a generation. Go to the ATM and take some cash out because the system is collapsing." The exact wrong thing to do. So I assume you'll have a more sober, level-headed take tomorrow, no matter what happens.
I'll do my best. I think I think one of the things that I'm sort of stressing to students and to clients is both that it's important to track both the rhetoric and the sort of detail of what's actually being enforced. And to sort of think about those kind of dynamics. And I think tomorrow and the coming days, really, because I don't think we're going to get a lot of full clarity, because I think a lot of what we're going to see tomorrow might be almost an opening offer, right, to countries around the world, to trading partners. I think those who were hoping on day one of the administration that this April 1, April 2, when all the trade reports were due, that we would have sort of clarity and a, sort of predictable policy process, probably being, have realized that that's not how the policy making works right now, but that I do think there's going to be corporations lobbying, there's going to be countries lobbying. And so I'm interested to see, I think we might be setting off a new phase in the trade kind of dynamics with this administration. And so, we'll see how that plays out. But I just think there's going to be, there's just so many things that the president and his team have pre-announced will either come into effect tomorrow or will be announced tomorrow that I think will be taking a few days to just unpack what's happened.
Yeah, although some of them, like I believe the auto tariffs don't technically go into effect until April 3rd. I love this line from your Substack. We'll put a link to your Substack in the show notes. But you said of the tariffs announced so far, they've only enacted the 20% tariffs on China, the non-USMCA compliant items from Canada and Mexico, and the steel and aluminum tariffs. That's it. I don't know if most listeners are like me, but that's a relatively short list when you think about how often we have heard the word tariff for the past 3 months. You probably would think that everything has been tariffed completely, to the extent that if you open up Reuters or any news source today, it's all about the trade war is coming. Like everybody's awaiting Liberation Day. And the question that I'm leading up to is sort of, I think we've already learned what we need to know, which is there is no plan. There is no grand, like, fourth dimensional chessboard that they're thinking of. They're literally throwing shit at the wall. And different people are coming in and out of the White House saying, please don't do this one. Please don't do this one. I'll give you this if you don't do this one. And President Trump and his aides are just sort of deciding on a willy-nilly basis what's going to go on. Now, maybe I'm not giving them enough credit, but to your point, I think the media or even like the normal observer wants to get to this point, like you said, that there's clarity that, this is what the menu is going to be. And I think we've already learned from the stop, on again, off again, start again, stop again tariffs, that there is going to be no one answer, that it's going to be completely ambiguous the whole time and things are going to be pulled off and put on sort of differently. Do you think I'm going too far there? Do you think there is some broader strategic vision that we're going to get to at some point?
Yeah, I'm not sure how quickly we're going to get there. I think there is a broad strategic vision, but I think there's a lot of stuff in the mix. And that broad strategic vision, in a sense, is increase tariffs, America first, lure in, invest, onshoring. And it's raise money from tariffs in order to avoid to cut taxes elsewhere, right? Tariffs or tax. Now, I'm not. You can tell from how I'm saying it that I'm not super optimistic that this policy process gets us closer, there, because I also think if the goal was really just onshoring, then I would actually think the U.S. government ought to have moved maybe more quickly on some of the investment review process. A month or two ago, we had the America First investment process that said CFIUS was going to be streamlined, that if you could prove a lower nexus to China, you were a friendly country, that you'd be sort of, pre-approved, or it would go faster. Maybe I'm being ungenerous here. But I think that you need to see a broader part of the picture. But I think where or maybe it's not a strategic vision. Maybe there's some elements of goals that are present. What I don't think is present is an understanding that the chaos and uncertainty makes a lot of businesses just say, hey, wait, I'm going to put things on hold. I'm going to wait and see what happens. If I can pull in more goods ahead of time, front run the tariffs to be, sort of deal with that, I'll do that. But if I have to make a decision on a long-term business objective as an individual or as a business, I think they're putting that on hold. And I think that, if anything, means that the economic hit of the tariffs is probably going to be greater. And that's one of the reasons, we're seeing it in the data. I know you've been tracking that closely on this podcast.
Yeah, I'm going to ask you an impossible question and ask you, why do they not realize that? Like, for you and me who are dealing with clients on a daily basis, like, I'm hearing over and over again, I can't do anything until I know what's going to happen. And what you and I are both agreeing on is we're not going to get clarity anytime soon. And Donald Trump, talks about what a great businessman he is all the time. You need some level of clarity if you want to achieve the goals. So, like, what is at the core of this? Does he really just think that these businesses are going to be there no matter what? And he has some scores to settle before he can actually do that? Because to your point, like, it seems like a fairly simplistic point to say, yeah, businesses can't operate in this kind of environment. If you want to lure in money, the way you lure in money is making them feel like it's a stable business environment where they're not going to be meddled with. And the Trump administration is basically insinuating the exact opposite. So how do you explain that, that break in their logic?
Yeah, I too have trouble fully understanding that particular, maybe some people have explained it by saying that, one-off real estate deals are sort of different than economy-wide supply chain considerations. The other thing I guess we alluded to, which is this whole element that, if you're going to be making goods in the United States, you often might need to import parts and intermediate products. And so if you hike up the tariffs there, it sort of, it just adds to the sort of uncertainty and impacts the competitiveness. So, there could be a sectoral element. I think the other part of the problem is that we are seeing eh, there's a range of different overlapping but also diverging goals for the tariffs. I talked about revenue and onshoring and economic protection, right? Well, which are historic, maybe 19th century reasons for putting tariffs in place. And, we still use them that way in the 21st century, right? Targeted, but we're also still seeing tariffs being used as a source not just of trade leverage and getting other countries to reduce their tariffs, but as a source for foreign policy leverage. The kinds of things that you and I, when we talked last year, we talked about in the context of financial sanctions. So we're
Hmm.
seeing at the same time this dynamic. So I think the different goals sort of, at play, I think muddy the waters. So if we can think occasionally under past administrations, one maybe valid criticism might be if that the that Congress and the administration maybe couldn't see a foreign policy problem that couldn't be solved with a financial sanction or a restriction like that. Now I think the Trump administration, in a way, can't see an economic or foreign policy challenge that can't be solved by putting a tariff on it. And I think we're sort of seeing that as probably not the case. The other thing, I guess, that's the shift is, just the fact that all of this is happening at the same time, that there's also uncertainty on the fiscal policy side, not just on whether the tax cuts are coming, but also on what's going to happen with the measures in the IRA. Right.
Hmm.
There are businesses, foreign businesses and domestic businesses that made investments based on those incentives. If they're already in, they're probably keeping on. But I heard, I was in London for Energy Week last, I guess, month and a half ago now. And there, a lot of the European countries just said, you know what? We're not sure what the terms are going to be. We'll wait and see on any new elements. So I can't help but think that some members of the administration are aware of this issue. But I think Trump himself, and some of those loud voices around him, whether they're people like Peter Navarro or sort of others, I think really buy into the tariffs as revenue and tariffs leverage. And I think they really think that there's just such a demand to be present in the U.S. market that people will do what's necessary. And of course, the U.S. has been and continues to be right now the consumer of first and last resort for the globe. So they're not completely wrong there. But I think the way things are rolling out, it's not the way you build new supply chains.
No, that's to put it lightly. Before we get to, because I want to talk about what you said about sanctions versus tariffs. And again, another impossible question for both of us. But if we were sitting here 6 months from now or shortly before Thanksgiving, do you think we're dealing with the same velocity of tariff threats and all these other sorts of things? Or is there some stabilization moment that is coming? My impression is no, that this is just the new normal and that this is the way it's going to be. And it's going to be a massive game of whack-a-mole. And it's going to be a game of, can you get exemptions or exceptions based on how close you are to President Trump's court? But do you see any kind of moment here in the next, I don't know, 3 to 6 months that would make you optimistic that the velocity of these things will slow down?
Yeah, so I think there are two scenarios, right? I think either what we get as a circumstance tomorrow where big maximalist measures are announced and then within a couple of days some of them are sort of, rolled back. And in which case, then maybe it's a whack-a-mole game of every month. We're back to sort of thinking about that. As you say, there are exemptions or other things along the way. That's kind of been what the story has been for the last couple of months. The other option is one where actually major tariffs are put in place, and then the negotiation, you get the economic hit more quickly. I'm thinking scenario one happens. My hunch is that either way, I mean, if it continues to be fast and furious, then I do think the market actors there'll still be some degree of stabilization because we'll start to somehow get more used to it in that context. But I just think the scale of the kind of revenue that this administration is hoping to raise from tariffs, but also their worry about the economic hit, suggests that this is going to be sort of a recurring story, and the like. I do think, whether it's Thanksgiving, whether it's next year, there probably has to be a shift in velocity. But after the point you were mentioning before about what we've actually seen so far, I think it's worth highlighting. On the one hand, maybe we might think that there are even greater tariffs than those, but those tariffs even are much in excess of the tariffs that were implemented in the first Trump administration, and definitely more than what was added on and kept in the Biden administration. So some of
Mhm.
it's just a nature of what one sort of gets used to and starts to think about and starts to sort of plan through. But one way or the other, we're looking at an administration that is really talking about a really big import tax hike. And, adjusting to that is going to take a long time, I think.
Before we talk sanctions versus tariffs, I feel like you're the perfect person to ask this question to. I agree on your scenarios. My one out there scenario, which I've been trying to imagine all the possibilities, is do a majority of congressmen or senators go to their constitutions and read Article 1 and read the sentence that says Congress has the power to lay and collect taxes, duties, imposts, and excises? And do they say, okay, you can't use Section 232 for everything? We are taking the ball back, Mr. President,
Yeah.
Mr. White House, and all future administrations. This power has been abused, and technically the founders laid this power with the Congress. The Congress will now be the one that is deciding whether tariffs are on or off. Is that completely pie in the sky? Or if it's 6 months from now and it's still fast and furious and we're getting towards the midterms and the Republicans are looking at their poll numbers and going, oh shit, like this looks bad. Is that even possible at this point? Or has the horse already bolted out of the bar?
No, I think it's possible, particularly in that context and the scale. I mean, it's interesting. I think as we speak, or earlier today, we have sort of, it's the Democratic senators, sort of pushing back on the fentanyl sort of emergency. This expansion of IEPA,
Mhm.
which until now had been the authorization for most of the financial sanctions that are in place. And that's the tricky one, because it's harder for Congress to push back and say there's not a fentanyl epidemic and an emergency. I think where they're pushing back is saying that 25% tariffs on one of the U.S. on two of the U.S.'s largest trading partners is not the proportionate response to that crisis. But yeah, I think there is this big question of what are the priorities from Congress. The timing, I guess, will be interesting, right? And sort of bought some time in the context of reconciliation, and sort of until the fall. And so maybe that question mark of what happens with sort of the next year spending bill, and then is it another continuing resolution? But the kinds of tariffs that are being proposed, there are enough congressmen that I think both know their rules, but also are aware that people in their jurisdictions are not happy about this. And so I think it's a scenario we should be watching for. Um, and yeah, especially here where we're really where the administration is trying to replace one tax with another tax.
All right. Well, if any staffers are listening, just give credit to where you heard the idea first, because I'm pretty sure tariffs are universally unpopular and that there's a big opportunity there waiting in plain sight if you're willing to take a little pain in the short term. Okay, so
Yeah,
let's
the
talk
polls
about.
definitely
Sorry.
say that. The polls are definitely saying that they're unpopular. I mean, I'm not necessarily saying that one should always do policy making by poll, but they don't seem to be the vote winner that the President Trump sort of hoped for.
No one believed he was going to do this, which is, that's a whole nother. Why did people believe he wasn't going to do exactly what he said he was going to do? But we can get
Yeah.
a psychoanalyst
Yeah,
on the
I mean,
podcast for that.
but I guess you're right. I mean, he definitely told us that he was going to do a lot of tariffs, that they're beautiful and that they solve all the problems. I think what had, and that he was going to replace tariffs with sanctions with tariffs, and in a sense, it's just going back and saying, well, they're all sanctions. Which, if you go back to kind of the research work in the 1990s, people will just use the term sanctions, and they meant trade sanctions. I was rereading Charlene Barshevsky's work between U.S. and China. Anyway, I'm off on a tangent. Um, but I do think that this sort of element here, I think the China, on the campaign trail, there was overall talk of tariffs, but there was also really this talk of very extensive tariffs on China. And that maybe didn't surprise people so much. And maybe that's why it's not such a surprise that of the tariffs that have actually stuck so far, it's been these ones on China. But for very different reasons. But yeah, I think the degree of going after large trading partners in this way. Also, and we'll see what happens in sort of later this week. But one of the other things that we learned in the first Trump administration is that tariffs lead to trade redirection, they lead to trade rerouting, they lead to development of new investments, not necessarily in the United States, but in their countries. And so we had the combination of tariffs and the pandemic and also the sanctions on Russia, I think led to a lot of trade redirection, new connector countries being a place that benefited from new investments. And so if there's only tariffs on large trading partners and not on maybe medium-sized trading partners, places like Vietnam and elsewhere, then I think the net result would just be even more trade redirection and maybe, might be not the worst environment for certain shipping companies and for more nimble companies that can more quickly create supply chains. And I'm thinking about Chinese and other supply chains there. But I don't think that's the goal that the president and his team intend.
Yeah. All right. Sanctions and tariffs as sanctions or sanctions as tariffs. In the last week, the big news was 25% tariffs on anybody who was importing Venezuelan crude. The big news, what was it, over the weekend, Trump was asked about how he felt about Vladimir Putin, and he said he was, quote unquote, pissed off, and that he would impose secondary tariffs of 25 to 50% on buyers of Russian oil. Leaving aside whether those things are realistic or not, I just thought I would, as we lead into the question, one of my favorite essays on economics ever is that Kimberly Ann Elliott piece for the Peterson Institute back in 1997, where she looked at from 1970 to 1997, she determined that unilateral U.S. sanction achieved foreign policy goals in 13% of the cases that they were imposed, that it was costing the United States almost $20 billion worth of exports and lost the United States 200,000 jobs in the export sector. What are the way that they're wielding these things any different than sanctions? Should we expect any kind of different result? Is it a distinction without a difference? Because you're absolutely right. On the one hand, there is, tariffs and protectionism. And on the other, it's just, I am pissed off at you, Vladimir. I'm going to throw some tariffs your way, and that's going to scare you into doing what I want you to do. So take that any direction you want.
Yeah, or I'm going to threaten to do them in the hopes you do it. I mean, it's interesting. This is what I think the third episode since the beginning of the Trump administration, where the rhetoric has been tougher sanctions on Russia, or tougher, let's say, economic pressure on Russia, as opposed to the general view, which was that the Trump administration wanted to be easing the economic pressure on Russia. They wanted the war to stop and the sanctions to be lifted, and the end to also this whole system coping mechanism, the shadow fleet, that reduced the role of the U.S. and the U.S. financial system on energy trade. And on that last point, I don't disagree with them. I think that coping mechanism creates that China and Russia and others have developed, creates a lot of its own problems. But I think the question mark is how to do it and what dynamics. So yeah, the question, as with a lot of policies, is does the bark match up to the bite, or vice versa, and maybe the bite to the bark, and on which sort of entities. I guess it is worth noting that where Russia's concerned, there haven't been meaningful new U.S. sanctions since the Trump administration came to power, but they did let a major sanctions exemption roll off that has had the net result of adding economic pressure to Russia. So it makes it harder to do energy trade in U.S. dollars. not a ton of energy trade was taking place in US dollars anymore anyways. So, it's a limiting factor. But yeah, I mean, despite all of the rally and optimism around sort of trade with Russia, it has became, again, more complicated in January, the end of the Biden administration, and has mostly carried on. So yeah, but this idea of secondary tariffs, now that kind of comes out of a rhetoric around secondary sanctions, which are sanctions on financial institutions in third countries. So if China's selling goods to Russia and we want to stop that happening, it's sanctioning the Chinese financial institution or the Emirati institution that facilitates it. So it's neither and tries to restrict that trade. Now, secondary sanctions really use the dominance of the U.S. dollar-backed, financial system to asymmetrically, potentially extraterritorial wield power. Now, secondary tariffs, in a sense, they're primary tariffs in a sense, but on an intermediary country. So now, one of the things I keep reminding people is you can only put tariffs on a country you trade with, right? It's not like, the US can go into China and say, oh, in China, we're going to collect a tax on every barrel of oil that you buy from Russia. What they're proposing to do is put tariffs on another set of tariffs on the same goods that are already facing an increasing import tax to come into the United States. So it's not just, any energy trade. It's also every Chinese item that comes into the United States. And of course, China would probably retaliate. They've done some retaliation to the existing ones, a little bit less. So look, I think this is still untested. We'll see. The Venezuelan ones that were announced sort of last week and theoretically come into effect tomorrow or later this week, on April 2nd or 3rd, or, who knows.
Who knows?
They would be based on what they would be targeted towards countries that were buying fuel from Venezuela, or those who facilitated it, or those who blended their own fuel in. So there's some questions about that in practice. Effectively, I would think China's the major target here. Now, if Russia was concerned, there's a lot more countries that could be subject to tariffs if this is something the Trump administration wants to use. India, in particular, would be in the mix. If it's about facilitation, the United Arab Emirates could be in the mix. Now, you can look at the UAE and say, well, might not matter so much because US-UAE trade is not that large. But the Trump administration is also expecting the UAE to continue to invest a lot in the United States. So, I think there's some challenges here in potentially, if there really is a switch over from financial sanctions, which in effect are up to the banks to enforce or face fines. So there might be a switch from something put on, as I say, the banks, to something where the consumers, the whole supply chain bears that cost. Now, for now, all the other existing financial sanctions are still in place, so it's not really, a relief to the banks. But it's not clear to me that using tariffs for that sort of coercive tool necessarily solves the problem, which is either the behavior that the U.S. wants to see stopped, whether it's a corrupt regime or war or the like. But there's also the risk that it might not solve this migration away from the U.S. dollar that the Trump administration is also theoretically trying to stop.
Yeah, theoretically, although also they're also whispering about a Mar-a-Lago Accord and somehow getting the dollar to lessen in value, which you can't do if you're sanctioning or tariffing people to use the dollar even more so. I think I understand what he's after when it goes to Russia, although you probably saw, Russia responding, or maybe responding today with saying that it was going to, basically stop Kazakh oil exports through the Caspian pipeline. I don't know if you saw that earlier. I mean, not that big of a deal, but maybe it's some way that they're trying to hit back. But what do you think their goal is with Venezuela? In the first administration, they basically tried to do regime change in Venezuela. It was like the it was like the Bay of Pigs light, and it blew up in their face, not quite as badly because they didn't commit as many resources to it. But I mean, that's basically what it was. It was like a version out of that playbook, and it didn't go anywhere. Are they looking for regime change in Venezuela? Is it a more circumspect goal? I don't quite understand why they're going after countries that are importing Venezuelan crude right now in that way.
Yeah, yeah. It's not clear to me exactly what the goal is. Um, Venezuela's been a tricky one to sort of figure out in this administration, and in fact, they started this administration seeming like they wanted to come closer
Yep.
to normalizing relations with Venezuela. We had, exchange of prisoners. There was talk about commercial dealings. There was other things going on. That would be like one scenario would be something like partial normalization, maybe oil for taking migrants back, right? Might have been one scenario, right? Now, the puzzling thing I think a little bit was also always that, Trump himself might have a view, but he was bringing in a State Department, a head of the State Department and a team around Marco Rubio that was very hawkish on Venezuela. And so there was always a little bit of that puzzlement of doing some of the negotiation, but knowing that, sort of those folks really wanted to increase pressure. And I'm not saying that the current swap is just because of that. But I think this administration has sent very, mixed signals, and it's not clear what they think a good deal would be. I think on Russia, even though there's additional pressure and then there's less pressure, I think it's clear what the U.S. government is trying to achieve, right? An end to the conflict, Russia back in the global community, Russia helping put pressure on Iran, like that seems clearer to me. Where
Mm-hmm.
Venezuela is concerned, part of it, I think, is U.S. domestic, dynamics, especially with the Florida GOP delegation and other things sort of at play. I think the Trump administration was a little too optimistic about how much of a majority they really had in the House. Now, I'm sure it was pretty clear to me, I'm sure pretty clear to you, that the kind of narrow majority that barely elected the speaker was not going to be easy to govern. But I do think those dynamics on the Venezuela license, really, complicated things. It does seem to me, I think there's some folks that would like, regime change, but I think there's also clearly this goal of, there's clearly this goal about trying to stop the flow of migrants and to get Venezuela to send, sort of accept people back. Now, of course, under sanctions and economic pressure, Venezuela is even less likely to be able to create the jobs for the people to stay and to rebuild and the like. So, uh, I think the strategy and goal is really not clear to me right now. In a way that I think it's a little clearer what the administration is trying to accomplish in Russia and with Iran and with some other jurisdictions.
Yeah. Um, and what about Russia? What about these secondary tariffs? Do you think we're going to get to the point where Trump is talking about tertiary tariffs? I would fall out of my seat if we got there. But what do you think it is just about getting Russia to play ball in Ukraine, which they're probably not going to do, at least not in the way that Trump wants? Like where's the puck going there?
Yeah. Yeah, I think they're probably not going to play ball as much as either Trump. I mean, Trump's bar for Russia playing ball has seemed pretty low to me,
Yeah.
or
But
in that way. And that's where I think probably, I was a little surprised by how pissed off he was sort of over the weekend, particularly given that the U.S. readout of the recent meeting with sort of Russia was pretty optimistic. Now, some of this may reflect both the fact that Russia seems to want more aggressive regime change in Ukraine than the U.S. is willing to tolerate. Some of it is also, I think, the fact that the Russians are really pushing for sanctions relief first.
mhm.
And, even for this Black Sea, ceasefire, right? Sort of Russia took this sort of unilateral or broad but short-term ceasefire that the Ukrainians under duress sort of proposed, and stretched it out into like a 3 or 4 part ceasefire deal in ways that allowed Russia to keep waging war in the ways that benefit it, and sort of arguably muzzle, one of Ukraine's important weapons, damaging Russian energy infrastructure. So I think there's different elements there. My hunch is that Putin will probably sort of give something or the semblance of something, and sort of actual new, more expansive tariffs will be unlikely. But
Hmm.
I just think the ceasefire diplomacy process will carry on for a while. It's not a linear process. There'll be sort of more rounds. The question mark will be at what point, or does Trump lose interest? Right. This has been sort of the key foreign policy priority of the administration, is bringing this war to an end. And at what point will he lose interest in the details? And what will that mean? But ultimately, it also comes back to Trump's own desire for oil prices to remain low and to go lower, right? Which, I think when oil prices are on the lower side, often U.S. administrations are a little more willing to put pressure on energy producers.
Hmm.
The challenge, of course, is that Trump's goal was not just have low oil prices, which in his mind would bring down overall inflation and would bring down interest rates, and everything would go boom, apparently. And I think he means boom in a good way, not an other kind of explosion. But the goal was also that more of that production would happen in the United States. And if anything, U.S. producers, you talk about this regularly, U.S. producers are not going to be investing at the current price points, especially if their costs of infrastructure building and drilling are going up because of the tariffs, right? And
Hmm.
herein we kind of sort of connect the dots that the sort of the policies don't quite sort of hang together.
Yeah. To what you said about boom, I don't know if you saw that interview where somebody asked him if he was worried about stagflation, and he said I haven't heard that in years. I don't know anything about it, but the country's going boom. We're going to have boomtown. It reminds me of I'm really stretching back now. I worked on a kibbutz for a couple months when I was in high school
Oh
in
yeah.
Israel, and I remember there was this guy who didn't speak much English, and he had this forklift thing, and he was moving big boxes of dried spices from one part of the room to the other part of the room, and every time he would do it, he said, "I'm going to make boom," and he would take the thing up and he would boom the stuff down over here, and then he'd come back and do it again. I couldn't help but think of that guy when I heard the thing about Boomtown. We
Yeah.
started with a conversation about sanctions and about U.S. enemies, but where I want to end our conversation is, all of this is interesting, and to quote President Trump after his meeting with Zelensky, it makes good TV. But when I'm talking to clients, when I'm thinking about investment portfolios, when I'm just thinking about my daily life and who's going to be able to build or help me reconstruct
Yeah.
my shed in my backyard, it's what does all this mean for Canada and Mexico? Because my base case right now is Trump is bluffing, that he knows he didn't get a good USMCA renegotiation the first time around because he was pulled in a bunch of different directions and didn't know how the system worked. He wants to fix that. He wants to get the USMCA with a Trump brand on it that's better for the United States than the first renegotiation that he oversaw. And that he's using the tariffs as a threat, but that we will eventually get a renegotiation. We will stop with the nonsense about Canada as a 51st state and all of the threats against Mexico. That is still my base case, even though he is surely testing the bounds of it. Is that
No.
your base case? Do you see other scenarios? Do you think he is serious about, I get the tariffs and everything else on China and Russia, Venezuela, tertiary sanctions, whatever you want.
Yeah.
But primary sanctions on your two most important and closest trading partners in the context of a trade war has always seemed baffling to me, unless it is part of a process that will end with a deal. Um, Tell me what you think.
Yeah. I think you're right. Now, I will say that the way he's going about doing that actually makes it more challenging to get to, to
Hmm.
a deal. Though there's enough, and look, I think that Canada and Mexico both, in looking for off ramps and in looking for sort of elements, we've had sort of subnational and national leaders, prompting that. And look, on the Canadian side, maybe there's a window both, sort of after the election at the end of the month when it's clear who's sort of who's governing, in that way to open it up. I think the question mark, though, for sort of if the off ramp can be let's renegotiate the USMCA, let's put a new Trump brand on it, which presumably means these countries hike up their external tariffs for against China. Maybe they do sort of other measures to sort of support support other Trump goals. I mean, I think it's worth noting that Canada did match U.S. tariffs on electric vehicles and other products last year, right? That was a different U.S. administration, so it probably doesn't count, and is on products that this administration doesn't care so much about, right? But nonetheless, I think there's sort of some openness to think about that. But I think the damage that's been done to these bilateral relationships at a diplomatic level and at an economic business level will still be there even if there's a new USMCA, right? And therein, I think they might want a new USMCA, but their goal is also bridge that any new USMCA to a circumstance where the U.S. is gradually increasing even more of its market share versus those trading partners, and by market share, and in those dynamics. But and so I think the challenge of using the tariffs with the ostensible goal of reducing fentanyl trade and strengthening the border make it more difficult to use that off ramp. But I do think that is probably the direction of travel. The reciprocal tariffs or maybe universal tariffs or whatever we're going to see later this week maybe also provide a scope for agreements with the Europeans to negotiate and figure some of those things out. They're not as important as Canada and Mexico, but they are the sort of markets that at least share some of the wage rates and other things like that the U.S. has, and the like. I think from a market perspective, the key question is there some confidence that one can have about cross-border supply chains, right? I think that's going to be really important. And USMCA and its predecessor, the NAFTA, were, I think, really important for that. And some of that uncertainty about whether the trade rules are just going to change again, I think some of that's going to be there regardless of whether there's a new deal.
Does that mean nearshoring is dead? Does that mean nearshoring is harder than we thought it was going to be in the first place? Like, what does this mean for businesses that have been thinking, okay, I'm going to get around a multipolar world by focusing on Canada and Mexico? If they've been listening to me, that's what I would have told them to do. So, like, how are we advising those people who made those decisions and now are facing that uncertainty that you're talking about?
Yeah, I think it is. Nearshoring is more difficult than we expected. There may well be sectors that it's better positioned. I'm watching closely whether the Trump administration really wants to unwind the efficiencies of the of the highly integrated auto supply chain and the like. I'm also really watching in the U.S.-Canada context critical mineral policy. Right, the DoD has some quite important investments in Canada as well as in other places. The U.S., of course, is continues to be committed in developing critical mineral extraction, but especially processing. The processing piece is key. That's really where China controls and has its choke points. Places like Canada, Australia, and others could be really part of that solution. But is where is friendshoring sort of in that context? I think the sort of the dynamic here is going to be the Trump administration does really want to support onshoring, not nearshoring. Um, but that's where I think, before we sort of give too much advice, that the question mark's going to be whether the whole package comes together to support onshoring. And that's where I think the investment review process, the regulation piece, and even the labor availability piece is really important, right? We saw in the Biden administration with industrial policy that one of the real limitations was, in places like Arizona, was things like, could you get enough engineers to work at these new plants? Right. And
Hmm.
I think that some of the projects that are being talked about now, these are, these are going to be sort of relevant ones now. So maybe the pendulum swings back towards some nearshoring, some friendshoring. We also might see some new friends, um, but I think we're going to have to sort of grapple with and be realistic about the fact that just cutting regulation doesn't necessarily lead to investment. If you're building out new supply chains or competing in new markets, you might actually need to be putting some real sort of incentivized, money to work. It's not just about making it easy to do it. It's also about, um, getting the right sort of structures in place. And that's particularly in cases where, in some of these sectors, whether it's, critical mineral sort of processing, where China has invested so much and their marginal cost of production are lower. I think this is going to be an issue we come back to. And that's going to be an area where I think it's also going to be interesting to watch where Congress ends up, because Congress is advancing a lot on the issues of copper, on critical minerals more generally, on thinking about uranium and sort of the nuclear supply chain. How will they think about these issues? And how will they think about it at a time when the Trump administration seems to take congressional spending agreements as a guideline, not as law?
Yeah, I mean that's a deeper that opens up a deeper box of problems that we talked about earlier, which is Congress's authority has atrophied so much that I'm not sure if it even tried to exercise some of its authority that it would be able to do so. Like on paper, Congress has lots of power that it can use to constrain and balance against even the most aggressive executive branch, but Congress hasn't done that. I mean, for decades. Like it's sort of hard to imagine Congress getting up off the mat there. Um, well, I'll turn it over to you for our last sort of thoughts. Is there anything we haven't talked about you think we need to talk about as we prepare for Liberation Day and the announcements and the media cycles that are to come?
Yeah, I mean, I think we've covered a lot. One of the things that we haven't covered that I've been sort of watching, as it was something you mentioned in passing, which is, how does this all fit in with things like the Mar-a-Lago Accords and the role of the dollar? One of the things that hasn't been happening in the recent couple of months has been, we haven't seen the degree of currency adjustment that people might have expected. Now, a lot of that reason is because the main target of tariffs was China, and China didn't let its currency be a shock absorber for its own reasons and the like. Um, I'm going to be, I think, interested to see when it's more countries involved, if the kind of typical currency adjustment that we would expect to see and continued and further rate differential, how that plays out. Um, Also, I was trying to think for some clients, trying to think about countries in the emerging world and those that were more exposed and less exposed. I think paradoxically, we might be looking at a case where larger, more continental economies, larger ones that have more domestic markets, might be a little bit better positioned now than those reliant on trade. I mean, some of that's a strong balance sheet thing, sort of in general. But I do think this piece of how the rates and the sort of the dollar sort of dynamics play out is going to be really important, because if the dollar isn't an absorber, then the U.S. then sort of U.S. consumers will probably be seeing more hikes at the grocery store and elsewhere. If the dollar does adjust, then that means U.S. exports are even more challenged. But it just reinforces who bears the highest cost domestically. So that'll be something to
Yeah.
watch for.
Yeah, I'm glad you mentioned that, and I'll put you on the spot a little bit. I mean, so I've had both Rob and Marco on the podcast recently saying that they're expecting, not huge dollar weakness, but, the dollar weaker from here. I look at it and I can't help but see a stronger dollar. It seems to me that everything is moving towards a strong dollar, even no matter what the Trump administration wants. What are you thinking for the rest of the year? You think are we range bound? Do you think it could weaken considerably? Do you think we're strengthening? Where would you put yourself on the scatter plot?
Yeah, I put myself more on the strengthening category, in part because I think I look at the rate differentials and other dynamics. I know that if we're in this environment of continued policy chaos, that's not good for the for sort of equity investments, and that those inflows are quite important. And yes, we have the trade and external deficit probably continue to sort of to expand, and that should be sort of dollar negative. But I feel like there's a bit of catch up to come in the dollar as a shock absorber, and which I think means a stronger dollar. The thing we haven't talked too much about, that I think will be relevant to watch as well, we've seen this move into European stocks, particularly led
Mm-hmm.
by the defense, sort of element. And that reinforced, I mean, we talked about why dollar China hasn't moved so much, but also the sort of Euro dynamic, this Germany being willing to spend more on defense, maybe being an important driver of European equities and maybe growth. We'll see how that sort of plays out. But yeah, I put myself a little more on the sort of the pendulum that's a bit of a bit of a stronger dollar. Then we'll have to see whether the sort of more debt part of the Mar-a-Lago Accords, formally or informally, how that plays out.
You mentioned you were in London a few weeks ago. What was the mood there? I mean, it's going to be very difficult for Canada to extricate itself from its very deep economic dependence on the United States, no matter what it wants to do. But it seems to me the UK is at a really interesting moment where they can either double down on the quote unquote special relationship, they can look towards the continent and be the sort of balancer against Germany and France and revisit some of these things. What did you feel like the mood was in London on the ground?
Yeah, so you'll laugh to hear that I went right from London basically to Vancouver. So I was in both countries, sort of one after the other. Yeah, look, I think the mood in London, and I happened to be in London right around the anniversary of Russia's full-scale invasion of Ukraine. So that kind of weighed over the sort of the landscape. In that way, look, I think the UK is really trying to mediate in this way. They're also trying to get lower tariffs and some special exemptions. The fact that they don't have a big trade surplus with the U.S. In fact, they have mostly a deficit. Maybe stands in their favor. And Keir Starmer has gone out of his way to, I think, really amplify, sort of use all the tools in his quiver, whether it's royal visit and other things like that. But I do think, I think the Brits are in an odd circumstance where both they're sort of, well, this is coming at a time where it's become clear that new trade deals are not as easy to do as the Brexiteers proposed. The UK is not going back into the European Union, but on foreign policy issues, they seem a lot more aligned with the European Union than they do with the US right now. And so I think that makes it somewhat uncomfortable. But they're seeing how that how that plays out quietly. The UK has recently joined the CPTPP, right? Sort of last year. So they're trying to kind of play the different sort of trade relationships. They're thinking about relations with Japan. They're thinking about a variety of actors. But, for them, I think really important from a security and an economic perspective to avoid major penalties from the U.S. And therein, I think, even subsequently to this, this question mark about, does the UK have the same sort of tariffs as the European Union? If it does, then I think a lot of people in the UK will be quite disappointed.
All right. Well, Rachel, thank you so much for taking the time. I know you're in the midst of a conference, and I had to move this recording on you once or twice. So thank you for bearing with us. And I am sure if you're willing, we'll have you back soon, and we could talk about how wrong we were.
Well, I think, we do, we do our best. And I think so it's always good to talk about the sort of shorter term sort of triggers, but also the longer term shifts that are happening. And just more generally, whether all of these countries can actually do the hard stuff, the productivity enhancing measures, reducing internal trade barriers. In Canada, which you just mentioned a moment ago, I think is sort of case in point. Is this, and Europe the same, right? Is there a time to do the hard stuff under crisis? When maybe it's equally hard, but it's existential. We'll see how that goes from the market side. But always glad to chat with you.
Okay, sounds good. We'll talk to you soon. Thank you so much for listening to the Jacob Shapiro podcast. The show is produced and edited by Jacob Smulian, and it's in many ways the Jacob Show. If you enjoyed today's episode, please don't forget to subscribe, rate, or leave a review. It takes just a couple seconds of your time, but it really helps us. Also share with a friend. If you're interested in learning more about hiring me to speak at your event, or if you want to learn more about the wealth management services that I offer through Bespoke or at Cognitive Investments, you can find more information at jacobshapiro.com. You can also write to me directly at jacob@jacobshapiro.com. I'm also on X for now with the handle Jacob Shap. That's Jacob, SHAP, no dats, dashes, or anything else, but I'm not hard to find. See you out there.